How's everybody doing? We're bringing in some of the last sessions of the day, and this one I know is going to be one of the most exciting ones. My name is Nicole Valentine. I am the FinTech Director at the Milken Institute, and I focus on the future of finance, the future of money, the future of the internet, and the future of global economies as with respect to how we can create prosperity for all through lenses of financial inclusion, access, and transparency. And so this conversation on megatrends is exciting because we have industry leaders, allocators, entrepreneurs, blockchain infrastructure leaders who are making decisions, strategic decisions on their investments, on moving forward through their lens of megatrends. And so I want to start this conversation with a perspective, putting who you are in perspective and what you see in perspective. So context matters. You want to know what the macroeconomic environment is and how the decisions that you're making come into focus. So with respect to your macro view, I want to start with Steve Kurz, Galaxy. You have spent a long career that spans traditional finance, now our future of finance. And I'd love to get a sense from you, when you look at your dashboard, what do you see in the world and how does that inform the trends that you're spotting?
It's a big question to start. Thank you. Thanks, everyone. So it's a weird world out there, I would say. And we sort of at Galaxy have a perspective on crypto and blockchain, but also an eye to the traditional world. And so we're not in any one camp, and we're trying to synthesize all of it. It feels like everything is getting tested. And that can be as high level as you want to be. That could be Pax Americana, speak softly and carry a big stick is not what's happening in the world. Our military is being tested, and we have to live up to that. Our borders are being tested. Our political systems are being tested. Fiat currency is being tested. And so I think that creates an underlying sense of nervousness in the world. And I think it drives an impulse for large institutions and governments to try to control things. When you can't figure out exactly what's going on, you want to sink your claws into it and feel comfortable and go back to the way things were. And it's increasingly clear we're not going back to where things were. And so I think that's an interesting lens to view the AI versus crypto discussion, which I'm sure we'll unpack today, and this idea of top-down control and systems, and then this bottom-up desire to be free. Crypto's part of that story, but it's not only that story, and that's not going anywhere. That's going to accelerate. So the rate of that feeling of nervousness and change and that tension as things get tested is really the reason that Bitcoin in particular was started, but it's also the reason that much of what we're seeing across our overall investment dashboard is going to be a good investment environment for some of what we're focused on.
That's great, and I'd love to, we're going to dig into crypto, the crypto winter, whether it's a crypto spring or it's going to stay thawed, what we're going to do. We'll dig into that later, and I want to hear your perspective on that. But I want to move to Steve DeMello. You're at Albourne, one of the largest, institutional alternative advisors out here. Want to get your view of the world from where you sit, and also you have some background, kind of, early stage OG, right, in this space. So I'd love to get who you are and your perspective in context.
Yeah, for sure. I mean, echo much of what Steve said, and I think two of the probably biggest trends that I expect to see impact the asset management industry over the next couple of years are definitely artificial intelligence and tokenization of assets. And Mike and I were speaking in the green room and made this comment that it wouldn't be altogether unsurprising to see allocators invest in a real estate fund 10 years from now, but that fund consists entirely of tokens. And that's a trend that I really expect to see take off. There's obviously major financial institutions partnering with blockchain infrastructure providers that are working on this, and we're starting to see alternative funds launched on chains, money market funds launched on chains, and I think that's just something that's going to iterate and spread across the entire alts industry.
We'll talk about allocators here with Texas Teachers, Michael Lazorik
Yes.
here. You also have been, I would say, pioneering from your seat that you're in. Want to get a sense of how you see the world that you're in now and maybe forecast into the future.
Sure. Being based in Austin, we're accustomed to change. We try and keep it weird there, but more importantly, at Texas Teachers, we have 2 million people that we try and serve, and we have 17-year liabilities. So we can't just be thinking about the next 3 years for the next fundraising cycle. And we're, very key constituents to make sure that we're working well with our peers like Galaxy, like Albourne. Those are both partners of ours. And, we want to make sure that we're on the cutting edge of what's happening. We'll happily put small dollars to work to make sure we understand change and what's happening in the world, because those changes are going to affect the big dollars we have in our main programs. And so it's very important that in the case of digital assets that we feel like we're getting ahead of that trend. And we do it with partners, and we do it in a way that's conservative and on one hand, but we're also aggressive as a pension to make sure that we're getting ahead of that.
Awesome. Talking about getting ahead of the curve, Lorien, I want to move to you because last year we were here, I think maybe on this very stage, and you pulled out a Chat GPT and you started it riffing on the moment they were in, and that really was happening. That was so early in kind of the 100 million downloads that was in the space. How do you stay ahead of the curve in terms of your spotting the trends, and in terms of AI, in terms of digital assets and blockchain? What's your view?
Well, not early and smart enough to start that company. So just to maybe see the trend. I'm just curious, actually, out of the people in the audience, how many of you use ChatGPT or another LLM model on a regular basis? It's pretty significant. I actually asked the same question at a Pure Tech conference last week, and I think it was 80% of people said yes, and that's usually the sharp tip of the spear. So I think that trend is going to continue. It's probably, it's found product market fit in a year that's surpassed just about any other consumer use or business use technology, or it's really up there. So I think we're going to continue to see that. Another question, how many of you would be interested in social media, if you knew that half of the content or some significant amount of the content was generated by an AI? Not real people, much less, right? I think, the whole point of social media is to see real people, I think. And I think you're starting to see some trends, especially around Gen Z usage, where they're spending less time on these apps. And so I think one thing basically social media has won the attention game for the last decade plus, and maybe this is something which is going to disrupt that in some way, and that I think that, at least Generation Z and probably most people are going to be much interested in social media if half of it's not generated by real people. So I kind of think that's something interesting, could stop that sort of relentless march of social media, which is unexpected. And then finally, kind of what I'm thinking about is around health. This is a trickier question. Take a minute to answer it. But if you, in ChatGPT 10.0 in a couple of years, you could upload all your health information, you could give your family history, and then ChatGPT or the equivalent would say to you, hey, I can give you 10 to 20 years of extra healthy life, but you have to do everything I say. So maybe I couldn't go to this conference, maybe I have to put down that French fry, maybe I shouldn't be in that relationship because it's not healthy for me. I don't know. You just have to listen to it entirely. Would you make that deal? So kind of a ridiculous question. Maybe, but we're already seeing it with Ozempic. Not really, but you're not eating how you would normally eat. You don't eat as much. You don't eat the same foods. Maybe you don't go out. It's affecting markets with second-order effects. So I think we're going to start to see with these LLMs that are become more and more powerful, if not generalized intelligence, that they're going to have significant second-order effects on our behavior. And we're going to have a lot of situations where we can make a choice. Do we want to listen to it and maybe live longer, but give up some, I think it's an interesting question about free will, but it's going to have a ton of effects around second markets, in the case of this, or Walmart food inventories of junk food have been affected, et cetera. So I think those are some interesting areas. And then finally, kind of throw something crazy and wild out there. If these agents are out there on the internet doing work for us, they're going to have to pay somehow for, maybe they'll exchange value between them. I don't think a ChatGPT can set up a bank account yet. So crypto is a perfect model for that, and might be fun to watch. So they're going to need something to trade with each other. So in a crazy future world.
I'd love to stay on this AI and get everyone's view on this, because I want to see what your perspective is on artificial intelligence impact on finance, on asset management. Machine learning has been embedded in banking for decades, but right now it's got our attention as to the other ways that it could be used. And so I'd be curious, Steve DeMello, if you want to just chime in on how AI may transform your industry.
Sure. Yeah, I'll comment on some of the ways in which we're seeing asset managers use AI to date, and I'd also love to touch on Lorien's points about sort of blockchain and AI intersection. But we did a survey in September of last year, polling approximately, I think, 180 managers, representing in excess of 3.3 trillion in AUM. And some of the findings from that were that only 12% of managers had prohibited usage of LLMs. 40% had no real policy, and 50 were effectively actively utilizing it to support their processes. Where they were utilizing it the most was across investment processes, business development and investor relations, and then information technology. And distilling that further from conversations with those managers, when it came to investment processing, where nobody's really using it is to make actual investment decisions. So that's a point that people just aren't comfortable yet with, given regulatory obligations to have a sound and kind of reasonable basis to make an investment, and hallucinations is just too big a risk. But in terms of efficiencies and allowing a research analyst to like extrapolate and assess large quantities of data, it's been hugely impactful. We spoke with the manager who had a really interesting use case because they typically, when they post a position, get 1,000 to 2,000 resumes. And so they use LLMs to basically filter through the 2,000 resumes and pull up the 10 that are suitable candidates for the job, and it just saves a significant amount of time. One that I haven't seen yet that I really expect to see a lot more going forward is compliance usage of AI software, because if you could think of what a chief compliance officer could do to identify market manipulation, front running, like those sorts of practices, like the level of surveillance that you can potentially get through if you can feed the right data into that, I think would be extremely powerful. And then just touching on Lorien's point, I also think AI will make blockchain so much more powerful than it is now because of the mass ability to sort of like analyze data on chain. And that's going to be so impactful in terms of like detecting fraudulent activity, market manipulation practices, but even faulty code in a smart contract. I think that there's a lot of synergies there.
Steve Kurz, you want to weigh in on that AI blockchain convergence?
I actually think blockchains are going to make AI more powerful. Maybe not powerful in the way that people are thinking about AIs right now, but I mean, if you guys are familiar with ZK proofs, the whole idea of AI scaling requires the integrity of the AI to be high. And so having a ZK proof basically allows you to prove the output without having to know the underlying input. So if you actually had a ZK-based AI system that could validate that the model that was being run on a data set was in fact the model that you thought it was, that's a huge point. And so crypto is really about proofs, right? And so proof of humanity, right? Proof of you mentioned bots and social media, right? The intersection of the work that's been done on crypto, not necessarily the crypto assets, but crypto assets have brought forward money into the space that's pulled ZK technology forward by 10 years. And that is going to be immediately impactful to the scalable impact and integrity of AI, in my opinion. So I think it'll go both ways, and they're sort of a yin and yang, and they're sort of they kind of need each other. But at the end of the day, it makes all the sense in the world from the crypto side of things that you have programmable money and money that's of the internet and native to the internet. And in fact, it's almost, that's all you need to know. If AI is real, crypto assets are going to be a part of it, because what other value transfer is going to exist that works seamlessly with such an efficient system in AI? So I just don't think you can extract the two from each other, and I think it's not a surprise, maybe 2 years ago or 3 years ago, crypto was, a busier room than this one, and AI was not quite there, and now it's sort of reversed. But when you look through that in 5 years, it's really going to be this, this tie-in.
I would love to tokenize our assets, tell our CIO there's no illiquidity premium in private equity, and make our job easier. That'd be great. I think that we're going to have, assuming we have enough data center capacity, power, and chips, I think we're going to have competing LLMs telling us what we do. So in the investment management business, we make decisions, and in our shop, we have to make decisions every day. We have to do them with velocity. So I see an opportunity where we're working with our partners. They have their LLMs, they're writing memos, they're telling us things. We have our LLMs that are analyzing their LLMs. But what I'm trying to say is you can extrapolate this out. At the end of the day, it's going to make humans more efficient to make better decisions. I do believe that. Interestingly, I read a study that in radiology, where you would think, okay, I'm going to give radiologists AI to make decisions. Well, guess what? AI plus radiologists make worse decisions than AI. So I feel there's this study, this human need to like second guess someone that's telling you something that you don't believe in. And there's maybe a need to like justify your job. So I think that we all have to think about the power of these models, and that there's competing answers, and that at the end of the day, it's still going to be a human and maybe a smaller section of humans that are making important decisions, and it's going to open up opportunities for everybody else. So I think it's a great thing, but I think it's a challenging thing to get your brain around.
So AI is on the agenda everywhere. Let's get back to digital assets.
Please.
I'd love to talk about crypto and talk about the evolution of crypto over the last years. Give us some context. Steve Kurz, if you want to just give us your sense of how is crypto moving and changing capital markets and institutions on the financial services side.
Yeah, and first of all, anyone who's still standing, so Lorien at Figment being one of them, after the last few years is worthy of some serious praise, because it's been a terrible. 2022 was terrible. I mean, it was really, really bad, and we were just hitting escape velocity, and
very dark.
Then you had SBF, and then the government was coming after us. It was a tough time. So that was the bad. Last year was a real digestion year. I think that was. Binance settling with the DOJ, some court cases with the SEC that worked out for crypto, the FTX estate being worked through. We were privileged to be selected by the court to work through that. So part of our mission is cleaning up the mess, and we've done that. I think when you start with a fresh slate, if you came in and you didn't think about any of the headlines of crypto over the last 5 years, none of the Dogecoin, none of Sam Bankman-Fried, none of ICOs, none of that stuff, and you looked at the Bitcoin ETF not as a driver forward of Bitcoin, which of course it is, but as the thing that got Invesco and many, many other major asset managers to make a strategic commitment at the CEO level to invest in crypto-based infrastructure, Bitcoin, Ethereum, tokenization, to Mike's point. I mean, you're going to look back on this and say it was not only a regulatory unlock, this was a validation of the underlying technology, and it's all you need to know to make your first investments in the space if you haven't done that. And so I think the real challenge is how do you ignore the noise of all of that, sift through it, don't do everything, do a few things, maybe with a partner, and then in 5 years I think you'll be really happy with those investment results.
So we talk about this crypto winter, right? But crypto was born in winter, so it's resilient, it's gritty, right? So in terms of where crypto is going, Steve DeMello, do you want to jump in?
Well, I wanted to, when Steve was kind of talking about the dark sort of period of the last year, 2022, if you were to go at the end of November 2022 and say to anyone in the crypto industry, and I get that it wasn't kind of like a straight line of all positive things, but 13 months from now, you'd be sitting here with regulation in Europe, the United Kingdom, the Middle East, Singapore, that's at least not blockchain unfriendly. There's an ETF backed by some of the largest financial institutions in the world. Grayscale and Ripple Labs with major court victories over the SEC. Tether still at par. Binance still one of the biggest liquidity venues in the industry. And a lot of the bad actors of the previous period charged, indicted, or whatever the case may be. And market cap of 1.7 trillion and Bitcoin above 40,000. Probably, I think anybody would have taken that deal at that time, right?
No doubt.
And so, it's despite everything that happened, there's just been a remarkable amount of things that have happened, and it seems to, I think, kind of have set the asset class up quite well for the future in terms of where it's going. We're seeing a lot better infrastructure that's there to enable and support the asset class. I think you're just seeing the maturation, I think, of an asset class.
So there's a lot of conversation around the case for ETH. I mean, you have Bitcoin. We know Bitcoin is there. ETH is kind of considered the second blue chip digital asset. Lorien, do you want to talk a little bit about ETH and where you see that going?
Yeah, this time.
Infrastructure?
Yeah, this time last year, ETH was making the transition to something called proof of stake, which I think we talked about a little bit, and that happened successfully. The amount of people who hold ETH and are now participating and running in the protocol, i.e. staking, has grown pretty significantly from 0 to, I think we're around 30 or 40% right now over the past year. And the network made that transition successfully, and I think, if Bitcoin has cemented the narrative around a digital gold gold, then Ethereum is doing the same around this open computer network, whether it's a payment rails for stable coins, USDC, et cetera. And one of the effects of the ETFs, I think, I kind of got in the space personally to disrupt or maybe provide an alternative to some of the big banks. And I kind of temper my enthusiasm for the ETFs for that reason, just sort of out of philosophical reasons. However, one good thing is I think it gives us another 5 years of kinetic energy and capital coming into the system for us to figure out the further use cases beyond digital gold, beyond stable coins, beyond a cheaper form of payment rails in some situations, NFTs and art, et cetera. Like we have a number of use cases that have been developed and decentralized trading platforms. And I think we now basically get another 5 years to see where else there's product market fit for this technology.
It's more than that, though, because the Invesco is our partner on the ETF, this BTCO ETF of ours. There's no way they would end up staking or doing anything in tokenization if they didn't first get into the Bitcoin ETF game.
That's right. Yeah.
So,
no, absolutely.
Philosophically.
Yeah. I get it exactly. And that's why there was for the last 2 years there was no energy coming into the system. People describe there's just like no kinetic energy, and part of that was regulatory, part of that was macro conditions, part of that was individual people in the industry. But yes, definitely, I think it really gives us that impetus to try to continue to experiment with this technology and provide an alternative.
Lots of technologies wander around in the trough of disillusionment, and it's not a good place to be, but a lot of the great technologies come out, and blockchain is in the trough of disillusionment. But let's talk about the alternative. I mean, most of our transactions today, are on my dad's mainframe. I mean, he was a punch card programmer at EDS. So, we may or may not like the fact that our wealth, a lot of our transactions, a lot of the things that we trust are sitting on mainframes, and, those are old technologies. And so as these new technologies come to pass, and it's going to be that very quick pivot where you see these new technologies taking advantage of the old mainframe in this example, because they are better. They take advantage of a lot of the tricks of the trade, if you will. They fix the exploitations, and frankly, it may be a large cyber attack somewhere that we weren't thinking about that may, make us realize that the blockchain is fundamentally more secure. And frankly, the future technology that we all need to be doing and spending time in. And, we'll still be transacting on our iPhones, but we just won't know that it's going to be a lot more secure. And frankly, it takes friction out of the economy. It saves money. It enables new use cases. So these things are all going to happen. It's just a matter of when.
I'd love to do like a 5-minute, let's do a speed round at the end, kind of get a couple points out that we may not have covered. Regulation, if we can kind of talk about a little bit more about regulation. I know you covered some, Steve. Are we going to see a regulated stablecoin first or a regulated CBDC first in the US?
That's a tough call. Stablecoin feels closer. And the nice thing with stablecoin regulation is that every regulator that's talking about stablecoin regulation is speaking the same language around the world. And so you kind of already know, even the proposed Loomis-Gillibrand bill in the United States, it sounds very much like what the MAS has discussed in Singapore and various other regulators. And so it feels close, and it seems like that's what the market needs, a transparent, fully backed stablecoin with diversified reserves that people have insight into. It just, it's common sense. And so if I had to pick, probably that one.
You want to weigh in, Steve?
Yeah, I mean, it's already happening in Europe. We're partnered with DWS, and there's going to be many more examples. I think from a legislation perspective, the chance that happens this year, first of all, it's stablecoin over CBDC. It's not impossible to see that regulation this year, but it's not going to be because it's the right regulation or the right time, even though I think that. It's going to be because Patrick McHenry is retiring, and it's do it for Patrick. So sometimes the politicians, corral around their pals for the last 20 years and make things happen. What's holding up crypto regulation is actually this narrative around, and I think it's a narrative, not fact, that Hamas financing happened through Bitcoin disproportionately to dollars. That's been that's gotten the AML, BSA, FinCEN crowd in there, and so there's a real counterbalance between the thoughtful stablecoin and market structure regulation and the riders to the bill with this. So how that plays out is going to be really interesting.
And what's ironic about that, that narrative, ironic, I don't know if that's the right word, rich, big huevos, I don't know, to see Gensler and Warren and some unnamed large bank executives talking about the dangers of criminality and terrorist finding. And I did a little search today. The fines of the large banks over the last 2 decades, take a guess?
Hundreds of billions.
$350 billion. JP Morgan alone, $38 billion in fines, and not for like esoteric regulations, but for like Mexican drug cartel financing, tax evasion, the financial, like setting up accounts for the poorest people in this country, and like mortgage fraud. I mean, it's unbelievable. Like, I don't know what the definition of a criminal enterprise is. Kind of sounds like it a little bit to me, but I don't know anything. I'm just a blockchain infrastructure guy. So the irony that they're, even raising this issue, and it's really about control and preserving their dominance in the financial and rent seeking, et cetera. So I think they're on their last legs, regardless of the election results next year. There will be someone new at the SEC, whoever wins. And I think the court cases are going to go in Coinbase's favor in general. And so, we're trying everything else stage, but eventually we'll do the right thing. And I think in 11 to 18 months, we'll have a regulatory environment everyone can work with.
Awesome. Mike, I want to give you the last word because you've mentioned Web3 in our prep calls and talked about that. Just a couple minutes on where do you see the world of Web3 going?
Yeah, I won't talk too much about it because I'm no longer the tech expert. I worked at Dell for a long time and did corporate venture there and invested in things that are now relevant today. But I realize that the people that are in this game right now are the experts. And what I said is, Web3 will succeed when your grandmother doesn't know that she's playing and transacting on Web3. Like Web3 is a far superior architecture, all the things we talked about, others have talked about this conference, whether it's AI, tokenization, getting rid of deep fakes. But the reality is most of the population doesn't even want to know that that's the case. And that's coming. And it's my hope that before that happens, that some of my pension peers don't look at us like being the vanguards, but are frankly calling us because they're ready to jump into the asset class, and it'll become an asset class that's supporting a variety of technologies and frankly undermining some of the existing companies, technologies, and asset classes that are out there. So I'd expect to see a transfer of value. I think 2024 is a year to rebuild trust, hopefully, knock on wood, and 2025, we're going to start to see some real success there.
Well, I want to thank you for your leadership, your insights, and your conversation today.